Today, I'm very happy to have with us Jason Ray from Zenith, Zenith Solutions. He's a CEO and founder. Welcome, Ray. How's everything?
Thank you. It's going well, John. I appreciate you having me. I'm looking forward to the conversation.
Of course. So, Jason, do you want to tell me a little bit about the company, how you started, the philosophy behind what you guys at Zenith are doing?
Definitely, yeah. So I started Zenith really to try to create wealth equality in society. I think the knowledge, tools, and resources to create long-term wealth are out there. And Zenith works with students, young professionals, minorities, people that are kind of traditionally underserved by traditional financial services, to help them, understand their options financially and then act on those options. We're structured as an investment advisor. We're based here in Philadelphia. I broke away from a larger wealth management firm about 9 months ago to start Zenith. And at that prior firm, we focused on kind of your super high net worth individual. And before that, I worked in the alternative investment space. So Zenith, it's been operating for 7 months now. We broke even last month, so growth has been good, and investment performance has been solid, and we've helped people create some real wealth. So,
And you're also an athlete, right?
That's right. Yeah. So I was a college football player. I played linebacker at Princeton, and I still compete athletically. So an example, I competed in the D10, or what used to be dubbed as the Wall Street Decathlon. It raises money for Sloan Kettering Memorial Cancer Research for children. So I tend to like to still compete if there's like a cause behind it, but I still play pickup basketball and flag football, and
not anymore due to the coronavirus, but yeah.
Right. Yeah. Not recently. Yeah. Yeah. I've been kind of stuck in my house doing workouts. Luckily, my wife is active as well, so we tend to work out in the house, and we get the dog involved. So we make the most of it. But I'm hoping to get out of the house soon. I'm starting to get a little stir crazy. I don't know about yourself.
Same here. I start going crazy. Like I only see two-dimensional people from all the Zoom calls, but
right.
yeah. So I really want to see people, like to touch other people. Yeah, it's happening. It's going to happen. So Jason, I want to know your opinion about the U.S. stock market. What's happening right now?
Yeah, the stock market is certainly volatile. I think there's a lot of uncertainty in the market, and I think to provide some certainty and to continue on the bull trend that we were on, we're going to need to see two things, right? Number one is virus containment. I think that could come in the form of like herd mentality here in the United States and abroad. It doesn't seem like that's happened yet, but I'm not a medical professional, so I'll keep listening to the experts. And then the second is just, company earnings, right? We need to understand what the impact of COVID shutdowns have on, a range of different companies' earnings. We're going to get a ton of earnings announcements next week, but it's been nice to hear some so far this week. It's been interesting to see some of the divide, I think, or maybe the further divide between big tech and your more manufacturing or industrial-based company. Snapchat, for example, posted huge user numbers. Netflix had a ton of subscriber growth, but that could be just a forward pull of growth. But I think it's going to start to illustrate a larger trend where businesses that are still able to operate now are likely going to continue to outperform. Look at Amazon stock, for example. It's all-time highs during a period of little economic activity. So, it's an interesting market. But I think if you're a long-term investor, it's presented some nice entry points and buying opportunities.
Oh, yeah.
Yeah.
What do you believe about the fact that the U.S. stock market is not following the current economic situation in the United States?
Yeah, that's a little bit to my point about the divide. I think that's a great question. We're seeing some horrible economic numbers. I think almost 27 million people filed for unemployment over the last 4 weeks. We've seen a lot of shutdowns. We've seen federal funds going to businesses, and a lot of them not even being able to access the funds. So the system, it seems like for, your everyday business is maybe a bit broken, right? And I think, Zenith is really trying to create wealth equality, but I think wealth inequality is going to continue to persist. And, the workers, I think, drive the economy with consumer spending, and that may fall off a cliff, right? So I think a recession is imminent. We're probably already in it, and this isn't the first time I think we've seen the stock market diverge from the economy. Look back in 2008, the stock market recovered a lot faster. The real estate market here in Philadelphia, for example, bottomed in 2011. By that time, the stock market was, it was crushing it. So, it's an interesting dynamic, and it's a little sad. I would say it's very sad, I think, and it's the inequality, I think, will grow. And I think Zenith, our mission is to inform and educate people without access to maybe invest right now or get high quality information right now to help them think about their own personal finances. And hopefully more of those efforts come about, because, I don't think people can rely on the federal government to help them. They certainly can't rely on their employer right now. So it's going to be a difficult economic environment, I think, for a while.
Yeah. And I take it you're a huge fan of technology and automation, right?
Right.
Oh, yeah.
I mean, that's going to do well, it seems like, right? Look at Zoom, right? And, I mentioned Amazon. Myself and my clients are big buyers of Microsoft stock because cloud computing and 5G infrastructure, and, they're ahead of the game. But there's only a couple companies like that, right? Yeah. Luckily, they employ a good amount of the U.S. population, but there's a large segment of people that just aren't, necessarily that type of worker prototype to get those jobs, right? So, maybe more of those jobs will come about, and maybe our educational systems will start to teach the skills necessary to work at a Google and be a software developer. But I think that realization may happen a little late, right? There's going to be some suffering before that, right?
Yeah.
What are your thoughts? I'm curious to hear. You got the software background, and I think agent risk is a great tool to kind of introduce into an environment like this, especially around the tax loss harvesting potentials and stuff. Like, what are you thinking?
Yeah, I believe that technology companies will be pretty much okay. The bigger companies, as you said, like Microsoft, Google, Apple, Facebook, because they have people that they know how to work remotely. Like literally, like for example, us at Agent Risk, we were working remotely, even though we have an office in Santa Monica. We used to work remotely, like most of our engineering team is remote. So for us, it's everyday business. Right. So I believe the engineering companies, the tech companies are very easy and to pivot. They know how to change their business plan. They have a lot of cash stashed in the bank, so they know how to do it. I'm really skeptical about what is going to happen with the high growth tech companies. For example, Tesla is a great example. Like, they have all the technology, they don't have a lot of cash, and they cannot do anything during this market. They cannot produce more cars, like at least as fast. So I'm more concerned about the high tech and not the conservative tech, if you can say, like the established technology companies. Right. Definitely 2020 is going to be a very interesting year. Like, it started with a big bang. So yeah, I'm really excited to see what we're going to do for the rest of the year.
Yeah, that's an interesting viewpoint. I agree with that. It's certainly been a strange year. I had some first quarter thoughts that I sent to clients, and I kind of started off by saying, like, 2019 was, let's be thankful for the returns that 2019 gave us, number one. Yeah. But two, this is a crazy year. Like the Kobe Bryant news. I know you're in the California area. Like, what? Crazy. That was crazy. And then the unfortunate, this virus spreading over here to the U.S., just global spreading is just like, it's messy, and there's a lot of conflicting information coming from federal to state to local government, right? It's hard to navigate. Luckily, we've been blessed here in my house and stayed healthy, but there's so many people who've been less fortunate. So yeah, it's going to be really interesting to see how we all come out of this.
What is your suggestion to investors that are thinking to liquidate their positions and move to all cash?
That's a great question. I think I would consider that somewhat of a aggressive move, right? I mean, I think you as a long-term investor, you want your money exposed to things that are generating return. Um, the Fed has lowered short-term interest rates, so your cash is losing to inflation, even though inflation is so low. So you're losing money in your bank account. I think if people are moving to cash, it's got to be to specific projects, that maybe lie outside the stock market. Here at Zenith, we look at a number of different alternative investments. A lot of clients recently we've been talking about real estate projects that they've got their eyes on. So maybe making their investment portfolio a little more conservative or moving to cash in order to have the money ready if they want to pounce on a private deal or real estate deal. I think moving to cash though and just staying put that's a difficult decision. I would only really suggest that. I mean, even for a pre-retiree, it's still a difficult decision to make because there are high quality companies to put your money to work in, like Amazon and Microsoft, right? So, and as a disclosure, I own Microsoft, I guess, to stay compliant. But yeah, I think moving to cash is, it's all about your risk tolerance, right? If it's hard to stomach the volatility, that is a move, but I wouldn't do it. I'm not advising anybody to do it, but I can't necessarily say it's wrong, right? It's so uncertain out there. Having cash on hand and having the ability to pay for some of your fixed expenses in case something happens is certainly prudent. Here at Zenith, we don't tell people to start investing until they have 4 to 6 months worth of their fixed expenses saved in cash.
Yeah.
But for everything over that, I think you want to be exposed to the long-term growth.
I couldn't agree more. Like the conversations I have with investors, I try to highlight it's not figuring out when the market will bottom. You also have to figure out when you're actually going to put money back into the stock market. So if you lose the rally and the market recovers or goes up like 20-25% and you are out of the market, like everybody needs to have a plan. That's what I believe. Like if you don't have a plan, it's like playing basketball, right? You need to know the team. Should we go faster? Should we go smaller? Should I do only 3-pointers? Can I make all the 3-pointers? So it's all about strategy and having a plan.
I completely agree. Yeah. I think you got to stick to your plan. Now's the time more than ever to stick to your guns, right?
Yeah.
So
what kind of portfolio do you think is more suitable for the volatility that we're experiencing in the stock market?
Yeah, that's another excellent question. I definitely think it depends on the investor type and their risk tolerance. I think now is the time where you want to take pages out of the Warren Buffett playbook and find some companies that you understand and that you feel are high quality, have long-term earnings potential, to try to invest and buy at cheaper prices right now. I think for the last, before the first quarter of this year, the last 10 years, it was very easy and appealing to kind of just be in a broad-based portfolio that had exposure to high-quality companies and low-quality companies because everybody was making money and that was cheap. I think now's the time you really got to think about, when you own SPY in your portfolio, what are some of those companies that are having negative earnings growth, and those are going to drag your performance down. So I think you want to be really selective, and you want to look for opportunities to purchase when we do see high bouts of volatility. So the tenets of that portfolio are a couple high quality companies or sectors that you like, and some cash ready to make purchases when we see significant drawdowns, right? I don't think, I'm not typically, and I think, Zenith's client profile is not, very bond heavy, right? We don't have too many people that are preparing for retirement. A lot of our clients are younger and they're earning. So the fixed income market, scares me right now. I'd be lying if I say I could really make any sense of it. So, I would have cash or I wouldn't have any fixed income in the portfolio at all.
Yeah. Same here.
Yeah.
What is financial literacy and why it is important? Why it's important for people to educate it?
Yeah, that's a great point. That kind of I appreciate you asking that. And I think at Zenith, financial literacy really is understanding your financial options, right? And I think there's a lot of information and opinions on the website, on the internet, and maybe within your own family about what to do financially. But sometimes it's hard to act on that information and kind of apply it to your own personal situation. So I really think financial literacy is understanding what your options are, having a place to aggregate that information, and then having opportunities to act on that information that you learned, right? So if you know and you understand that you need to have expenses saved in case of an emergency, having the ability to actually open a savings account that yields you a high level of interest, or you understand the benefits of alternative investing, but you're 22 years old. You got to still have access to be able to buy alternative investments, right? Otherwise, that education, that literacy piece is lost. So there's two. Those are the two main tenets, right? The education and the access. We're really focused on that at Zenith, and that's our core mission, right? Is to educate people and then give them the abilities to act on that. Our three programs are Learn, Grow, and Freedom. So the Learn stage is kind of that initial. You're understanding education, you're understanding and figure out what your options are, and it's starting to get personalized for you. And then our Grow package is really for people that are trying to get some more personalized experience and make sure they're putting their money right in the places that are most effective and earning them the highest and most efficient rates of return. And then Freedom is like, you've grown and you've invested and put your money in good places, but how do you think about changing your relationship with money really, and using your assets and your money to start to fund your lifestyle so that you can detach from being paid hourly or salary, and remove your own personal time element with the element of making money for your time. Yeah, I'm passionate about financial literacy. I think it's lost on a huge population of the United States, and investing is a big piece of understanding your financial options. And I appreciate you being on me being on this podcast, and giving me a platform to talk a little bit about it.
Of course, yeah. I want to ask you a final question. What do you think is the role of the human advisor that technology cannot replace?
Yeah, so I think it's all about trust, right? And I think the market in financial advice has two, it's barbelled, right? There's little in the middle, but you kind of have your technology-based robo-advisor, like your Betterment, your Wealthfront, Robinhood, if you will, where they want you to invest your money, and they're making money on asset-based fees or trading fees, but they're not really educating you on the other parts of your financial picture, right? So, well, how do I know how much money to invest, and how do I know how much money to save? Should I pay down debt? Should I donate or give money to friends? Should I invest in myself versus just putting all my money in a robo? And then there's kind of the other side, which is like the Morgan Stanley advisor, right? Or kind of your super high net worth serving financial professional that is doing really complex things, but they have huge minimums. So that the middle gap is really, I think humans can use technology like a Betterment or a Robinhood to help people understand their options. That's where Zenith is. We're trying to fit in the middle there, right? Because those platforms lack the person, right? There's nobody to trust. It's just technology. Yeah. So I think the intersection of humans and technology is an optimal mix, right? Because people have somebody to talk to, they have somebody to look at and say like, wow, this person is a thought leader, or this company is really, they have a bunch of people that support me, and they can understand my personal situation, not just from math, but also the social element, right? Even if it doesn't make sense for me to pay down my debt because it's only costing me 3% to borrow, emotionally, I want to pay it down, right? Mm-hmm. So having the human in there to kind of help is, I think it's vital. And there's not enough people using and leveraging technology, right? Mm-hmm. As an advisor to serve people that I think need the advice most. So yeah, small Zenith plug, but I think that's where we kind of fit into the equation. I think that's where you guys are doing an excellent job. I think your platform does an excellent job marrying the two, right? Because technology can make financial advisors so much more efficient.
Yeah, no, you're absolutely right. Like there are available tools. Like we should create the hybrid advisors where we have the human element and we have the tools that make everybody's job more efficient, faster, and of course, better. Sometimes better because as humans we do we do a lot of mistakes. It's good to have like somebody like on our shoulder telling us like, hey, you know what, maybe you should think about it. Like it's not bad to have an advisor, the advisor having an advisor.
Right. Yeah, no, exactly. I'm with you. Yeah. Yeah, it's always good to ask questions, right? And having a human to answer them always feels nice.
Of course.
Yeah.
Perfect. Thanks a lot, Jason. For you guys that are watching, this was Jason Ray, CEO and founder of Zenith Solutions. Thank you a lot, Jason, for taking this time to be here with us at Between Two Funds, which we're trying to make it between two ferns, but without all the obnoxious questions. So thanks again for being with us, and let's keep in touch. And of course, you can find Jason's information down below in the description, and we'll have all the links to Zenith Solution and specifically to Jason's LinkedIn profile. Thank you, everybody.
Awesome. Thank you.